How's it, guys, and happy new year to all of you, my viewers. Today's video is going to be about breakup blocks and how I use them. So we are going to go over a bearish breakup block, the bullish breakup block, and the structure that defines them. So without talking too much, let's get to the video. So for a bearish breakup block, we have to have a high, then a low, then a higher high relative to this high, then a displacement to create a lower low relative to this low, and a bearish breakup block will be located in the leg between this high here and this low. So it will consist of a single candle or a series of down candle, right? So what happens is that we have to wait after this displacement here, we have to wait for the market to come and retest the series of down candle or a single down candle before going further down. So this works in that it is an opposite of an order block, in that what usually works is that from this high high here, we expect an order block to form between the leg of this low and this high high. So we expect the market to come and retrace into this order block here and make a high high again. But when the market fails, to create a high high instead, and it breaks the structure to the downside, then what we understand is that now a breaker block will form in between this high and this low. So we now wait for the market to retrace in between the high and the low, where our breaker block will be located before the market going down. What you guys have to understand is that this is an order block before it turns into a breaker block. The break of structure to the downside validate this breaker block. Okay, so that is a bearish breaker block. Now let's go and look at what is a bullish breaker block. A bullish breaker block is an inverse of a bearish breaker block, in that here we have the structure is we have this low, then we have a high, then we have a lower low, then we have a displacement above this high, creating this high high, and wait for the market to retrace into the breaker blocks before going up. So a breaker block will form in between the leg of the low and the high. So it will consist of a single down up candle or a series of up candle in between this low and this high. Let me name this. So when we have this series of up candle or a single up candle going up before this break of structure to the downside, and this displacement is present, changing the state of delivery here, we can confirm that we have a breaker block in between this low and this high. So we wait for the market to come and retrace into the breaker block and take our position there and sell and buy. So and buy. So what I like to do with the breaker block is I like to combine it with other US ICT concept. So in this instance, we are combining the breaker block with a displacement. So for every breaker block, there must be a displacement, because when there is a displacement, there exists a fair value gap. So you can combine it with a fair value gap. You find that there's a fair value gap present here, and that act as a confirmation also, or confluence, that this breaker block will work because it's a breaker block combined with a fair value gap. It gives a higher probability trade. Okay, now that we have learn the different types of breaker blocks and how to trade them, let's go to the market and look at a few market examples. Okay, guys, for our first example, we're on US 100, which is Nasdaq on the daily time frame. What we are looking for is a bearish breaker block. So what we have here, we have a structural pattern whereby the market made this low, then the market made a high, then the market made a low, then the market made a higher high, then the market displays below this low and made a lower low, which is relative to this low. So we have a lower low here and a break of structure to the downside. A low and a break of structure to the downside. So when we have this, it validates that we have to search for our breaker block. So our breaker block will form in between the leg of this high and this low. So we look at a series of down candle or a singular down candle in the leg between this high and this low, and that acts as our breaker block. So we have our breaker block here. So wait for the market to come and retest this breaker block before going further down. And if you look further and you want to combine it with other ICT concept, you have to look into the displacement leg of this higher high and this lower low. So what we have here, we have this volume imbalance. It's a volume imbalance because it consists of two candles, in which the body of the first candle does not overlap with the body of the second candle. The wick of the candles do overlap, which makes it not to be a fair value gap, but a volume imbalance whereby the bodies do not overlap. So you wait for the market to create a lower low, then come and retest this breakup block or this volume imbalance, and you take your sell position here. You can take at the 50% of the breakup block or at the 50% of the volume imbalance. You hide your stop loss above this high or above the breakup block itself. Then you target the nearest low, which is this one, or you can target and you can take your partials here and write it further down, or you can take it a long time low, right? That is a bearish breakup block. So now let's go to a bullish breakup block. Okay guys, now for our last and final example, we're on US80, which is US Wall Street 8, right? So we have a situation whereby we have a low here and a high. So this is a high. Why is it a high? Because it's higher than the previous high. So when people see this, they say, okay, now we have a change in the market structure, but it's not. So what we have here is we have a liquidity grab. So we have when the market moves above this high, we have a liquidity grab. Why is it the liquidity grab? Because the market knows that whenever this low was broken or this low was broken, people move their stop loss from this high here to this high. So the market, before going further down to attack this high, the market will take liquidity from the upside first. So don't mind this. What you have to mind is, now we're talking about breakup blocks, so we have to have this high, then we have a low, then we have a high, then we have a lower low, and we have a lower low. It's a lower low relative to this low, and the market displaces above this high. So when the market displaces above this high, then we are confident now that the market is going up. So we have to look for our bullish breakup blocks. Where do we find our bullish breakup block? Our bullish breakup block will be a series of up candle or a single up candle in between the leg of the low and the high. So where do we see? We look at, let's start with this candle here. Let's use the wick and end with this candle here. So we have this up candle here and this up candle. So it's a series of candle going up, which are responsible for the break of structure to the downside, which in turn is placed above this high here. So what we have to wait for the market to retrace into the 50% of this breakup block before going up. So, and once again, if you want to combine it and make it more powerful with other ICT concepts, you look at this. You say we find a fair value gap here. It's a fair value gap because the bodies, the candles of the wick of the first candle does not overlap with the wick of the third candle. So where they do not overlap, we call it a fair value gap. So what you can do to increase your RR is you take your position from the fair value gap, either the 50% of the fair value gap or the open of the fair value gap. So let's use the open of the fair value gap or the 50% of the fair value gap, whichever one you prefer. The first, you took a position here and you target this high here, and you had your stop loss either for safety above this low or below the breakup block candles, right? So this is all that you do. You can take your partials here. Let's see. You can take your partials here and write it and find other highs, or you can take your full position here. Okay, guys. So that's it for today's video. As you can hear from my voice that I have a bit of flu. So if my voice is not that clear, I apologize for that. But if you are enjoying this, please like, subscribe, and comment to this video for further more video. Let's start 2024 on a great note. Thank you for your support last year. Let's continue with the support this year, guys. Until we meet again next week. Peace out.